Hello traders, this is Frank Paul from FXM Trend. I'd like to welcome you to this latest weekly complimentary video presentation, which is now all about FXM Trend Trader. For 2 years up to now, we've been profiling the Fibonacci swing trader methodology. I believe that we've taken that basic concept of buying the dips, selling the rallies to a whole new level of sophistication and ease of use by way of automated tools that we're able to now provide in our FXM Trend Trader system, that if you had any interest in Fibonacci swing trader whatsoever, you might find this definitely worth taking a look at, because it represents a quantum leap forward in terms of where we were previously. FST was essentially a trading methodology complemented by a daily short-term market forecast. We're offering so much more with our new service. A much tighter, better put together online video course content, which you can access for the entirety of your membership. As mentioned already, we have real-time tools including our online momentum matrix, trend tracking, and entry signal generating tool. I should add the caveat there, its signals are not under any situation to be traded as passive trade entry signals. I'll get to that in just a minute. But it is a very helpful tool for focusing your attention where the market seems to be trending per the definition that we've established within our trading methodology. We also have an EA semi-automation tool. You can turn it on and off, set the bias accordingly, i.e. manage it. Not let it run as a robot, but manage it actively to assist you with trade entry when you've already identified a trend and a continuation setup, and a whole bunch of other goodies as well. So it's definitely worth checking out. Today we're going to show you an illustration of a recent trade setup, and just to give you an ultra brief, high-level, concise definition of what our methodology is all about. First of all, we start with a 3-screen MACD histogram slope reading. What do I mean by 3-screen histogram slope reading? Well, we're using the MACD histogram, and we're applying Dr. Alexander Elder's concept of slope, whereby you look at the last 2 bars on the close, most recent to the previous, to the current open bar. So on whatever open bar that you're at right now, you look back over the most recent 2 bars. And if those 2 histogram bars slope down or up, you have a reading. If they're flat or level, which does happen sometimes, you can defer to the previous reading, if there was one. And on any one time frame in isolation, that's almost meaningless. But when you can line up that same 2-bar histogram slope reading concurrently on 3 consecutive time frames, daily, 4 hours, 60-minute, it can be a pretty powerful signal of a trending market. And we're very clear about this point in our course content. Even that is not enough. We don't want to base this thing on indicators, because sometimes you can get such indicator readings within corrective market environments or within consolidation, and you don't want to take action in those situations. So what we need to do in all instances is marry together this particular indicator confluence with proper market flow analysis. Now that term scares some people off if they don't know what it means, or they assume it's much more difficult or complicated than it really is. Market flow is not hard. It's both the easiest and most important form of analysis, in my opinion, that you could possibly learn. It's a million times easier than more sophisticated, complicated methodologies like Elliott wave analysis and Gartley patterns. When you've trained your eye to see swing points, which in turn yield to impulse waves and retracements, and you link those so-called continuation moves together in sequence such that you have a progression of higher highs and lows from left to right on your chart, or lower lows and highs from left to right, then you have a trending market, and we're always looking to trade with the trend. Once we have our so-called 3M reading, 3 time frames, M for momentum, based on that MACD histogram slope validated by market flow, we can then drill down to lower time frames. We're pairing together here the 5-minute and 1-minute charts, which work jointly. The 5-minute chart provides a basic validation signal in line with the 3M reading. So if we have a bearish 3M reading, the MACD histogram slope is down on those 3 consecutive time frames. We're looking for MACD on the 5-minute chart to register as bearish as well. And then we drill down to the 1-minute chart, looking first for a counter trend MACD on that reading, and then by way of a crossover event, MACD down and through the midline, if you're bearish, let's say, which is the same thing as the underlying moving averages that we plot on those time frames, the 10 and 20 EMAs crossing over. Then you have a potential entry signal. And then it's all about trade execution and management. We have very detailed methodologies pertaining to all 4 trading styles: scalping, day trading, swing trading, position trading. And this is where our EA semi-automation tool can come in really handy, because you don't have to wait for the real-time entry signal on the 1-minute chart. When you have a trend reading, when you have market flow, when you have a continuation setup, when you're reasonably close to the end of a correction on the 4-hour or 1-minute charts, that's where you flip the switch. Turn it on and set the bias as appropriate, and let the EA take over from there. So that's pretty much it in a very high-level, brief rundown. What I'd like to do now is just to walk you through a chart example, a trade from this week. It's to be updated on our performance tracking database. This is for the USD CAD pair with a short bias going back to Monday this week, November 19th. The entry trigger came on the 1-minute chart at 2:04 a.m. with an entry price of 1.0002. We always defer to a reasonably tight 20 pip protective stop all in. That means including spread. We're trying to keep risk to an acceptable minimum here in all cases, regardless of the scale of trade you're going for. Now, our system defaults to a 4-lot scaling out methodology, where you first of all calculate your prudent total position sizing, then split that down into 4 equal sized lots, and then the EA, for example, looks for profit first at a so-called scalp target. It's actually more like a small day trade target. It looks for 30 pips profit. That's the benchmark to make the trade risk-free. When it finds 30 pips profit, it will close the scalp portion of the 4-lot trade and simultaneously trail the stops on the 3 open legs to break even. Unless it's a situation like we see here, where just coincidentally the day trade target, this is strictly strange coincidence, happened to line up exactly the same as a scalp leg. It's not a typo. There were 30 pips in both instances. So in this particular trade, we did get 30 pips attainment on the scalp leg, 30 pips on the day trade leg, and then just today, as I record this, Friday of this week, we got completion of the swing trade leg for 72 pips. So that adds up to 132 pips so far. Now, bearing in mind, again, that that is for a 4-lot trade. So if you wanted to take that down to a single lot equivalent, that would be so far equivalent to about 40 pips. Okay, so one decision you have to make in terms of applying this method is whether you're comfortable scaling out and therefore dividing your position, or whether you would prefer an all or nothing approach, where you don't want all of these 4 different targets. You want to make it an all or nothing trade on just one of them, for example. Maybe you prefer to day trade. Maybe you'd rather just put it all on the line for 30 to 60 pips or thereabouts for a day trade target. That's possible. Our system allows for that. So anyway, there we have it. We'll take a look at our charts in just a minute. Before we do, in case you're interested in learning more about FXM Trend Trader, there's the URL. We just launched Monday this past week, forexmentor.com/FXM Trend Trader. And you can also follow us on Twitter. We have a fairly active feed there, updated daily, multiple tweets of interest at FXM Trend Trader, or of course simply twitter.com/FXM Trend Trader. Okay, with that out of the way, let's turn our attention now to our charts, and I'll see if I can walk you through this method in a little bit more detailed fashion. We're going to look at a total of 6 charts here on USD CAD. The higher level time frames, starting from the weekly chart all the way down to the 1-minute chart, the 5-minute and 1-minute constituting our so-called execution time frames. And it's a bit of a chicken and egg argument as to whether you begin with market flow analysis or you begin with the trend reading. I think that depending on your analytical style, you can use either of those two approaches as it suits you. In other words, you can begin with your charts and do proper market flow analysis, and if you have market flow, then you're looking for a continuation setup, and once you find a continuation setup, you're looking for all the signals to chime in. That's probably the most logical way to do it. Or maybe you track a large number of pairs, and quite frankly, you couldn't be bothered to do all of that analysis until you feel that there's indication of a trending market. That's possible too. So you look for the 3M trend signal, and then once you have it, you immediately pull up your charts and do market flow analysis on the fly, or at least update what you might have done previously. And in just a moment here, once we finish looking at our charts, I'm going to show you our real-time momentum matrix tool, which is helpful in that pursuit. But let's start with a weekly chart here for USD CAD. Now, the weekly is not a core time frame within our system, but as we make clear in our online course, you obviously want to reference the weekly and monthly charts from time to time just to get the higher level perspective that tells you what the daily chart is doing, because the daily chart in isolation, even though it's a higher time frame, doesn't necessarily give you the whole picture. So here on the weekly chart, members of our service within the scope of the analysis, our daily market flow report that we post every day, have heard and seen me mention this sort of downtrend continuation pattern I believe that we're looking at here for USD CAD from June 4th, the high labeled swing point A, down to September 10th, a low labeled B. There's an imminent swing point high that is a high preceded and followed by two lower highs on both sides. We're not quite there yet. We've got a first lower high. Next week would give us another lower high, and there's the confirmed swing point. And so the idea is here is you would join A to B, and that looks like about a 50% Fibonacci retracement as USD CAD prepares to head lower. So this is just sort of supplemental view, which helps me make sense of what I see on the daily chart, because here the Fibonacci's that I've drawn are a little different, and quite honestly, I don't know for sure which one is the correct one, just to be brutally honest. But what I do have a sense of is that as we get to right here, November 16th, we have a daily swing point high which is confirmed by November 21st. That swing point high, nice and deep in the Fibonacci target zone here between the 61.8 and 78.6 Fibos. By the way, Fibonacci is not a core component of our system either. It's just I like to use that to make sense of retracements and continuations. Anyway, swing point high, negative divergence. And now if you look really closely, I'm just going to zoom out here a little bit. Here's an example of two-bar slope readings. I don't know if you can see it, it's pretty small, but if you look at the MACD histogram bar for November 14th, it's whatever value it is. It doesn't really matter what the numerical value is, but it's a bar. And then on the 15th, it's followed by a lower bar. And that is apparent as of the open for Friday, November 16th. So together with negative divergence here, we have a two-bar negative or bearish histogram slope reading on the daily chart for November 16th. And that, of course, carries forward into Monday the 19th, which in turn formed part of our trend reading. So you can see what we're trying to do here. We have a continuation setup. We're trying to call a corrective top. And if the corrective top is in place, we should be expecting a downtrend continuation. If we get it, we should see this simple yet powerful trend signal aligning on the three time frames, daily, 4-hour, 1-hour charts. And thereafter, you know, we're looking for trend line breaks, we're looking for bearish market flow in the lower time frames, etc. Then on the 4-hour chart, this is a pattern I had posted for our members earlier in the week. In fact, yeah, here we go. A down to B. This is sort of a fractal downtrend continuation, fractal in this case, just meaning a smaller version of a larger pattern unfolding. And so when we had this A down to B move, we had consolidation, sideways oriented market, and then price breaks that B level. That is what I call a bearish reversal wave. It's the first continuation pattern basically within a change in market flow from up to the top here to down, heading down again, which lines up nicely with our daily chart view. And so I've drawn a dashed vertical line right through here, midnight GMT on November 19th. And here again, you see a 2-bar negative or bearish histogram slope. Now notice a 2-bar down reading can happen with red bars painting in below the zero line or with green bars painting above. Okay, all that matters is that the most recent bar is lower than the one before it. So that's true here. Midnight GMT November 15th was lower than the one before it. That's true here. 8 p.m. GMT on the 18th, that's lower than the one before it. A lower negative value as opposed to a lower positive value. But here's a negative bar bearish slope. Here's a positive bar bearish slope. They're both similar in meaning, bearish. Okay, so through this week we tracked a very tedious, boring retracement, but that did convey lower lows ahead, and into today we've got them. So that's a nice bit of market flow. But the main takeaway here, in addition, is this histogram slope reading. So then we drill down to the hourly chart, and as of right here, 2 a.m. GMT November 19th, once again, I've got a bearish 2-bar histogram slope reading. So there we have it. That is a 3M trend reading as of right there, 2 a.m. on the 19th. So I've done my market flow analysis. You've heard me talk about it already. I've got my bearish slope reading. I then pull up my 5-minute chart, and I've just drawn a dashed vertical line through a possible entry point here. I've got paired EMAs, 10 and 20 EMAs right here, and that is just the same information, just depicted in slightly different format here with our simplified MACD. 1029 MACD. I've omitted the signal line in the histogram bar. So the reason why I use the simplified MACD is because it can make crossover events like here, for example, just a little easier to see. Sometimes these moving averages get knotted up with the price bars, and it makes it a little bit harder to see, but you can see that more clearly on the on the MACD panel. So as of right here, 2 a.m. GMT on the 19th, I have a bearish reading, which is what I want. This is just a very simple validation reading. It means that on the second to lowest time frame, momentum seems to be bearish at this point. We then drill down to the 1-minute chart, and we're looking first for a counter trend MACD reading. Now this is a tiny little blip. You might not even be able to see it. Whoops, let me try that again. There you go. Tiniest little counter trend blip on the 1-minute MACD. Truth is, I prefer to see a clearer reading like this, for example, where it's just more noticeable. But bullish is bullish, no matter how fleeting. And so by the time we get to right here, 2:04 a.m., we can see that short-lived counter trend reading resolved to trend, crossing back down and through, which is the same thing as saying a moving average crossover right here. And so we're in on the open of the first bar after the crossover on its close, and that puts us right here, 2:04 a.m., entry price of 1002. So I'm just going to draw a line right here. It looks a little bit different than the actual open on the bar here, because I'm using Heikin-Ashi bars, which give you something different than the actual open. But anyway, that's the entry price right there, 1002. So put a stop 20 pips above, all the way up here. 1022. Now I'm not worrying about dealing spread, because in this illustration I can tell you it made no difference to the outcome anyway. The actual entry price would have been a couple pips lower, the actual protective stop would have been a couple pips lower, but neither of those issues made any difference. So that's my entry point, that's my protective stop. Whether I'm choosing to use an all or nothing approach or scale out, and I'm just transferred the protective stop to here, the 5-minute chart. You can see that there is some noise later on, a little bit of drawdown action here, but nothing that threatened that initial protective stop, and then later in the day price moved well away from it. Okay, so what we then do, and I'll just get rid of this information now, we then set our targets. Okay, and so the first one would be 30 pips under entry, which would be 99.72, And I won't go through the math, but on this particular day, when you subtract the 5-day ADR figure from the actual high for the day, that just ended up being at the exact same level. And then we do a swing trade target, which is basically 2 times average daily range off of the high on the day in which the trade was executed. And we set that as a limit exit, and we finally got it through here. Now the position trade is carried open. It's managed by way of a daily bar trailing stop. I won't get into the details of that right now, but we are in a position trade short now on USD CAD after attainment of the scalp and day trade and swing trade objectives. So it's working out so far, this trade on USD CAD, and it nicely reflected the methodology, the setups that we're looking for. And I have to tell you, it's not going to be easy by any stretch if you happen to come along later and look for an entry point here, because the number one enemy of this trading system in terms of price action is difficult consolidation markets like you see here, because you will get entry points. Mechanically they look fine, but they can get stopped out when using tight stops through noise like this. So it's preferable to try and grab an entry point when the market is actually making a move. It was right here. It was trending down in the aftermath of a corrective top and so on and so forth. But when you're stuck in a consolidation channel like this, you really have to be careful. You should only think about potential execution signals if they happen to align in the aftermath of a retest. Like for example, we see a corrective high here, okay, and then price pulls back, comes right back up. So if you were to find an entry signal here in the aftermath of a retest towards the top end of the consolidation range, it's worth a shot. Otherwise, you just have to simply wait patiently, because we saw a number of very difficult retracements this week on USD CAD and other pairs as well. So anyway, that's pretty much it. What I'd like to do now is hit the pause button, and before we sign off, just give you a quick tour of the Momentum Matrix tool, which helps you find these trending markets. Okay, we're now at the page. There's a page in the members area for the Momentum Matrix, and it has some explanatory information here at the top. The most important of which I would suggest is the fact that the Momentum Matrix is not, I repeat, not a passive trade entry signal generator. All it does is capture indicator readings across as many as 5 different time frames at once. And put simply, we're looking for the same bias of reading up or down across all 5. In fact, we're looking for it across 4, and then when a corrective reading on the 1-minute chart flips to trending, that's where we're looking to potentially take action. So this information is not tradable in and of itself. You have to be careful when it says entry long, entry short. That's if and only if you have taken a look at your charts and confirmed for yourself that this indicator confluence aligns with a valid continuation setup within a valid trending market. Okay, that's the responsibility of you, the trader. We're not making this robotic. It's not strictly mechanical. There is an element of human judgment and discretionary analysis here, and there's just no way around that. We tried making a completely mechanical robotic tool, and it generated results, but we don't think that those are the maximally beneficial results. We think better results are attained by applying a little bit of human judgment as well. Okay, so here it is. We've got a grid format. We've got 25 different pairs listed. I'm sure that will cover pretty much all the tradables that about 99% of our traders would ever look at. We don't cover Norwegian krona, Swedish krona, South African rand, more exotic currencies like that, but we do cover off all of the majors and pretty much all of the cross pairs derived from the majors. We don't bother with Euro Swiss because of the pegged rates now. It's kind of meaningless, but most of the pairs that most people would trade. And we've got within this grid kind of a panel labeled 3M timeframes. That's daily, 4-hour, 60-minute chart. They capture the 2-bar MACD histogram slope readings we just talked about. We've got execution timeframes comprising the 5-minute and 1-minute chart. If you've got bullish slope readings, let's say on the 3M timeframes, then a bullish MACD on the 5-minute chart would provide your validation signal. And then when a corrective reading on the 1 minute chart flips to trending, which happens in real time on the 1 minute close, then the trading bias flips from blank to long, or just invert that whole thing for a short bias. Okay, so what this does is when you get 3 ups or 3 downs, if you've done your market flow analysis for a pair in question already, and you're expecting a continuation move, this just tells you, okay, it's likely happening now. We're probably into uptrend or downtrend continuation mode. Or conversely, the other way to approach this is just look for the signal and then flip into your charts quickly and do your market flow analysis. Now that might sound backwards, but again, if you train your eye to see market flow, it's just simply impulse waves and retracements, lower lows and highs or higher highs and lows. You can literally assess your charts top down. I would suggest you can do it in a minute. I mean, I've got it down to a minute right now, and I'm not a world's foremost authority in this stuff, but I can do market flow analysis, weekly, daily, 4-hour, 1-hour chart, literally in a minute. And either you have clear, compelling market flow aligned in that direction, or you don't. And if you don't do anything with it. But this tool is really cool. It's up and running 24. Well, I say 24/6. I have a colleague who disputes that it's 6. It's actually 5 because it's actually Monday in Australia when it starts. But anyway, you get the idea. North American Sunday afternoon open till New York session close Friday. Running continuously, you can have this thing up on your desktop. There's an audio alert feature which you can turn on or off. It just gives you a little chime when a new entry to the signal log is posted. The signal log to the right hand chart, we didn't really talk about that, but it identifies the date, time, this is GMT time, I should point out, currency pair, and then the 1 minute crossover indicative of a potential type of entry. Again, not to be traded passively or blindly, but only in conjunction with the reading on the matrix and proper market flow analysis. So it's a really handy tool. It saves you some time. Wow, we've got a lot of signals today. Lots going on. Boy, almost this is kind of like feast or famine here. It's usually not as many signals as this. In case you're wondering what to do when you have too many, first of all, you can further refine this list by eliminating, for your own purposes, redundant pairs. Where you have the same reading at the same time on either the same base or quote. So I'm looking at CAD yen and Swiss yen and Euro yen and pound yen, and they're all giving me up readings here. Well, I'm not going to look for trades on all 4 of those because that would be an over-leveraged position. I would instead prefer to just choose one of those. So you can almost just flip a coin or pick the first on the list or pick the one that you're most familiar with. Just choose one of the 4 yen quote pairs I just mentioned and take a look at it. And then if you've determined that there's a trade there, fine. Then you've looked at all the yen quotes. You can look at something else thereafter. Maybe, well, there isn't much else. Well, Kiwi Canadian, for example, or Kiwi US. Okay, so just because we're kind of buried with signals here doesn't mean you have to scramble and feel stress about having to deal with all that information at once. You can further refine this concept based on redundant pairs. So anyway, I just wanted to give you a quick look at the matrix. Very handy tool, one of a number that we have available here, and we hope that you can check us out sometime soon. If you have any questions on anything you saw today or the service in general, feel free to email me via frank@forexmentor.com. Would be glad to hear from you. Thanks for joining us today. Have a great weekend. We'll talk to you soon. Bye now.